Good morning, good afternoon, everyone. I'm so glad you guys could come over. This is a financial literacy week, and as a result, we are doing another financial seminar. The name of this is Fiscally Fit Financially. Uh, Before I take off, I'd like to thank Myra Benitez and Seguin Library for giving me this opportunity to speak to you in front of you. Thank you, Myra. Appreciate it. Myra, it didn't work. Okay, thank you. Thanks, Myra. Like I said, thank you for joining us. Our hope today is to provide you with some valuable information, have some fun, and energy, and enjoy this next hour. Also, a big thank you to Mara Benitez and Seguin Public Library. Now we come to a question: when will your financial journey begin? Goals require time and commitment. You cannot be lazy on that. You have to take control. Planning can be confusing. Seek professional help. And there are many occasions and aspects to getting financial fitness. Financial fitness is like creating a block of securities, which basically comes to protection, retirement, investing, taxes, and estate planning. We manage it or it manages us. You have two choices. Moving on, here is a diagram that will show you how do we overcome challenges. First, we start with planning for tomorrow, which is basically a goal. Then we follow the plan, try to see what we can do to increase the cash flow. There are a lot of ways, and you can always find them out. The next goal is reducing of taxes legally. There are some loopholes, there are some deductions available that you can possibly get them, and then build up a good emergency fund. You never know when you need this. Overcoming a challenges. Being fiscally fit is following a specific behavior that will help you to lead financial independence. Adjust the way you think and commit to yourself. Focus on replacing your old habits with successful ones. And nothing will change. Remember that. Nothing will change until you do. So make it happen. The challenges you are faced with is working into retirement. Do you want to do that? And nowadays, we have a longer life expectancy than we ever had before. We have a new standard of living. The impact of inflation and taxes, and especially with inflation that's coming up. I'll give an example. Like Social Security, last year the increase in Social Security was almost 5%, 4.9 is something. I just read today that the inflation is 8.5%. So basically, you're losing 3.5% from your pocket. And so your income has really gone down. It's dollars, you have more, but it buys less. Social Security is not adequate for retirement, like I said. Personal saving is usually insufficient for most of them. And medium income is trending down after the inflation is coming down, rather than increasing your income. How do you get out of debts? There are three methods out there, but I'm not going to go into any of those. In short, you have to make sure that you start paying down your debts, because that takes a lot of your money. The interest alone could be pretty expensive. and it could take years, you might end up paying 25% more than what you owe probably. You have to, in order to achieve most of it, you have to do some budgeting, which we're going to talk about on Thursday. Develop a budget, examine your income versus expenses, and you have to be real and honest and sincere about it. Come as close as you can, because then at the end of the day, you'll know at the end of the month whether you have some money left over or you have some debts left over. The question you consider when you do that is, can I afford my lifestyle? Do I need to increase my income? In most of the time, yes. It always helps. What can I live without? There are some things. You maybe have a subscription that you don't need anymore. That $50 out there all add up. At the end of the year, that $50 a month is $600. And if you have several of them, they can add up some couple of $1,000s. So what you have to do is just figure out where you are right now to where you want to go. It may take you years, but hey, it's a good step. You're taking some steps, and that will definitely help you out. Now, cash flow management. This is also very important. What can you do to generate more income? That's the thing. If you have more income, naturally you have a better lifestyle, less debts, no stress, or less stress, and you can help your family and enjoy your life. Skills you may have to acquire, but maybe you have the skill that can help you generate more revenue. There are two hidden takeaways. One, like I mentioned, inflation, they eat into your income, and without you realizing what is happening. And of course, everybody see what they pay at the end of the year to Uncle Sam. How to build an emergency fund. Plan for unexpected emergencies by setting up an emergency saving fund. Emergency can happen to anyone at any time. Take conservative saving vehicles and set aside at least 3 to 6 months worth of expenses to help cope with life expenses. If you can save 20% out of every monthly income you get, that'd be great. If not, try 10, try 5, but at least take a start somewhere. There's a rule of 72. A rule of 72 really basically states to find the number of years required to double your money minimum at a given interest rate. For example, if you want to know how long it will take you to double your money at 6% interest, divide 6 into 72 and you will get 9 years. So it will take you 9 years to whatever you started with for the money to double. That is if you haven't touched anything, you haven't taken it out or anything. There's a lot of other ways to do it. You have investment like stock, bonds, pension, retirement account, mutual funds. So take all those, well of that, like a 401k as an example. If you have a 401k at work and the employer is contributing 5% to, they're matching it up to 5%. Hey, that's free money. Why don't you contribute 5%? That's your savings. Plus, you're getting an extra 5%, and you're building it up. So that's a fantastic way of doing it. Going to the next level, just think about these questions. When was the last time you made a budget? Do you have a debt repayment strategy, or you're just paying a minimum every month, which will take you years to even, and the interest will probably develop almost, or 50%, 25% of what you're paying. How much are you putting into savings? How much is your emergency fund? Have you talked to somebody to help you out, like a financial planner or someone else that can help you? Now, all these are connected about the credit. Credit also have a big impact in your life. How you manage your money, and then what is the effect? If you don't have a good credit, you may have little money, but at least you're going to pay a lot more. That means you go through that. You have to look at your credit report. Once a year, it's free to you. Take them. Why is your credit report important? We'll go through that. Credit scores. what impact your scores, what constitutes credit history, what is in there, significance of good credit score, and effect of a good versus a bad credit. Now, let's see what is a credit score. A credit report is a record of credit history that begins when you open your first credit account. The volume and nature of information on a credit report depends on a couple of things. How much credit you applied for and received, and how well you have managed and paid your debt. Information that can be on a credit report, some of these would be like date of birth, social security, your name, your addresses, previous address, current address, and the employer you work for. Account type, revolving, fixed account, loan, date open, credit limit or loan amount, the balance you have right now, monthly payment that you make, date of your last payment, date of your last activity in the account, and if it was closed, when was that closed? There may be credit inquiries, there may be collection accounts, there are public record, judgment, foreclosure, bankruptcy, liens. There may be personal statement. You only have these if you have submitted a statement. This is not automatic. In other words, if you're disputing something and you've submitted a statement out there that, hey, this is not my debt, this is what happened, it will be there. What a credit report does not include is your credit score, which is separate credit rating. The two are not unrelated. They are related, but it's not in the same report normally. There's some other things that are not included. Your income or net worth, your unemployment, your spouse credit history, your criminal record, your medical records, the race, religion, and political party affiliation. Although medical records will not show up in your credit report, unpaid medical debts could show up in collections. There are over 40 consumer reporting agencies. Not just, there are three main ones, of course, but there are a lot of affiliated agencies. To be exact, about 46 consumer agencies. But it's the big three national credit bureaus that matter most: TransUnion, Experian, and Equifax. Each of the three national credit bureaus has its own credit reporting on file for you. These reports are complied using information provided to them by data. Remember one thing, the credit score on each of them may not be the same. You might have 721, 751, 680. So there could be three different things. Depends, how they compile the reports, what they get in there, and all the stuff. Now, why should we have a good credit, and how does it influence your life? Everybody either wants a credit card, they want a rental car, they want something. They will need to get a business loan, personal loans, revolving credit. That is required. It's absolutely necessary to have a good credit report, because it will also affect your interest rate. In other words, you could get 30% versus 14% if you have a good credit. Your auto insurance premium, people will check it. When you go to open the account, they will check it, whether you're approved for house or apartment. That's when you wouldn't need it. If you want to get a rental apartment, they check your credit. If you want to go for a job, they do it. All the major employees will do. So it's not just the ability to get credit that's affected by your credit reports. It's how much you pay for it too. Take financing, take a financing of a car, for example. Your credit not only affects whether you get the loan, but the deposit you are required, which is a down payment required to make the interest rate you get, and what you pay in auto insurance premium. So all those three things are related, and they will affect. There are about 5 factors there that will affect your credit. Your payment history, which is the top. Your credit utilization is the credit usage. So if you have 70% credit usage versus 30%, you have a much better credit report. The length of your credit history. New credit. How often have you applied? Have you got the card or not? Did they reject you? Did they approve you? And then it's a mix of all the credits. The more mix, the better it is. Like I told you, it's, a lot of people look at your credit. So if you have a good credit, it will help. Trust me, it will help a lot in your life. Uh, Lower interest, better loan terms, maintain good credit score. So just do that. Uh, So good credit score is essentially is very essential, and fit in as a whole in the financial picture. Okay, there it is, effect of good work versus bad credit. A poor credit history can have a wide-ranging consequences than you might even think. Not only will a spotty credit report lead to higher interest rate and fewer loan options, it can also make it harder to find housing and acquire certain services. In some cases, it can count against you in a job hunt. I'll give you an example. Let's say if you don't have a credit card and you go for rental of a car, you can't get it. I think very few people, unless you put in a lot of deposit out there, money, which you're not going to do most of the time. The bottom line on all this is bad credit can make it harder to access credit cards, loan, and mortgage. And it might even affect your job prospects. There are plenty of ways to improve your credit history and build your credit score. Start by making on-time payment and all of your current credit cards and begin paying down your old debts. Like I said, 30% will versus 70% will affect a lot. Consider taking out a secured credit card or loan, personal loan, to build a positive credit history and increase the amount of credit available to you. Your credit score should improve as you continue to practice good credit habits and use credit responsibly. Now let's come to the other one more part that's part of this picture too, the financial picture, health insurance. People don't realize that how that is affected, but think about it. If you don't have a savings and something medical is something that can happen anytime. And if it does, you have the means to pay it. Do you have a good medical insurance? Do you have the hospitalization bill? Because there's always a deductible. There's always a co-payment available, things for hospitals even if you have an insurance, it's still deductible, hospital deductible, other deductibles that you may have to pay. Simply put, insurance is a binding contract between a policyholder and the insurance company. In exchange for agreed payment and terms stipulated and spelled out in the policy, insurance companies agree to hedge against your financial losses. As you all know, there are all types of insurance, mainly business and commercial, personal lines, life, health, supplemental, ancillary products, Medicare, Medicare supplement, and Medicaid. Here's a breakdown: business and commercial, personal line. I mean, business and commercial is not going to matter unless you're in business. Personal line, it will, because you might need a rental insurance, auto insurance. Everybody, if you have a car, you need an auto insurance. If you have a home, you need that. Life insurance is another way. What happens if something happens to you? Will your family be able to take care of your dependents or someone else? Even a smaller policy would help a lot. That will cover final expense. There are mortgage protection policies out there. Look into it. Health insurance. There are two exchanges. One is on exchange, off exchange. ACA is pretty popular. You can have a group insurance. You can have individual major insurance. Short term, there's a whole bunch of other things available. Supplementary and ancillary product insurance, just like dental, vision, hearing, chronic, which could be critical, terminal like a cancer. It could be a gap insurance, which could cover your hospital deduction. So there's other things available to make you really less open out there. There's Medicare for people who are 65 years old and over. For people with disability, major choices they have are original Medicare, Medicare Advantage plans, and Medicare supplement. And then even if you don't qualify for any of this, you have a low income, you can always look into Medicaid. And probably everybody knows what is a health insurance. In short, health insurance is the product that covers your medical expenses. Health insurance covers you if you get sick or injured. It also provides preventive care such as your doctor visit and test before you get sick. You can't control when you get sick or injured, but you do have the option to be prepared for any unfortunate and unforeseen situation that arise and choose to make it affordable and effective to your needs. Simply put, health insurance can save you a tremendous amount of money and can make a difference between staying afloat or going bankrupt. It is equally important as your auto and home insurance to have health insurance. It is equally important to have, just like home and car insurance, to have a health coverage for your unforeseen major expenses, such as emergency, hospitalization, chronic, critical, and other conditions that you might come up with. There's the Obamacare, which is available, which is also called Affordable Care Act. The Affordable Care Act, known as Obamacare, made covering certain health care services a requirement for all health insurance plans available to consumers. There are 10 essential benefits that should be covered in a good major policy, a good insurance policy. Ambulatory care, emergency, hospitalization, pregnancy, mental health, prescription drugs, rehab and rehabilitative services, laboratory services, preventive and wellness services, and pediatric services. Eligibility requirement, there are not that many. Almost most of the, if you're a U.S. citizen or alien out here, legal alien, and if you live in the United States, you are eligible. Must be a citizen, national, or lawfully present. Can be in the jail. There are other things available there which are different plans, but you can always find out when you're ready. There's an HMO, there's a PPO, there's a EPO, and they all have different reasons. Most of the time, the most popular one you'll see is PPO and HMO, but EPO not that much. There's a point of service plan. There's a catastrophic plan. That's for people most of the time who are 30 years or under, and they are healthy. They just want something just in case something happens to them. It's available to them. They have a higher deductible and other things. Then there's another high deductible health plan. These are other things that's available to you. And rather than confusing and going through it, you can always call me, let me know, and I can help you out. My services are always at no charge. Anything I do, review with you, sit down, look at your policy, it's nothing. Out of this type of health plan, HMO, PPO, EPO, and PS, there's 5-6 different ones. Look at the higher out-of-pocket costs than many type of plans like other plans. See what you can do. Those things, premium is not the only factor that to look at. Look at, hey, what happens if I go to the hospital? A plan which has a zero premium, but the next one has a $15 premium, may have a much better benefit than a zero plan. much can have a much lesser deductible, copay. Those will help you, trust me. Just one time something happens, and you're gonna realize that. There are silver plans, gold, bronze, and silver plans available under the HSA. There's a health savings account premium, which is normally it's offered through group insurance most of the time. Or even you can set it up where there are some deductibles, where you have limits, deductibles, money to put in, all these factors. So, my friends, you and you alone are responsible for these financial choices you make today. That will determine your financial fitness and your lifestyle tomorrow. Thank you for attending. I really appreciate that. And if you have any questions or a no-cost review for no-cost review of your life, health, credit, or anything I can help, please call me or email me. There's my information out there. My name is Salim, last name Ali, and I'm at 210-488-1054. And there's my email address. And lastly, let's say thanks again to the Seguin Public Library and Mara out here. Mara. Thank you. Have a nice day. Didn't take much.